Imagine capturing massive downside moves in the afternoon session by perfectly aligning with institutional order flow right after the New York lunch hour manipulation. But most traders completely miss this edge. They keep holding morning positions or jumping into random reversals, getting chopped up and watching profits evaporate. The hidden truth is that smart money deliberately engineers liquidity grabs during lunch to trap both early shorts and late breakout longs before the real directional expansion begins. If you're still ignoring daily bias and lunch hour mechanics, you're trading blind against the algorithm every single day. By the end of this video, you'll master the complete afternoon session framework for high-probability bearish setups with crystal-clear confirmation. Look at this chart showing the exact lunch hour sweep unfolding. Let's get started. Here are the precise rules for trading an afternoon session setup. Before you even think about entering a trade in the afternoon, you must first determine what the daily range is attempting to accomplish. Is the market trying to expand to the upside? Is it pushing to expand lower? Did it already reverse during the morning session and now preparing for a counter-trend continuation? Or is it simply consolidating ahead of a major news event coming later, that same day or the next? Pay attention here. On days like this one we are examining, we had a clear bearish bias. So the entire framework has to remain one-directional. And in this example, it was never ambiguous. It gave a very specific signal once price began breaking structure after lunch. Now watch what happens next. When does the New York lunch period officially end? It wraps at 1 p.m. New York local time, right here. So the window from 12 o'clock to 1 o'clock is our New York lunch consolidation zone. If the bias is bearish, what does the market typically do? It clears stops during that lunch hour. Focus on these highs that formed during lunch and just before it. This was the buy-side liquidity pool or the short-term high. So at 1 o'clock, the algorithm reprices and drives price upward to sweep those stops sitting above the buy side. During lunch, notice how they took out those stops right here. But here's where most traders make a mistake. If you are aggressive, you could enter a trade in this area because we are clearly in a directional move. We are anticipating a large range expansion day. And large range days often develop with a very active lunch hour period. Here's something extremely important to notice. Remember, if the market moves fast during lunch, it can easily form a significant high or a significant low. The core premise is straightforward. When bearish, you look for highs like this one to get swept. Why? Because the algorithm does not want participants to stay profitable. Especially those who entered shorts from the morning or just before this high appeared. They may already be short from here. Instead of allowing a clean break lower toward a previous PD array and discount, the algorithm reprices higher. It knocks those shorts out by flooding the market with buyers at elevated prices. Higher than what? Higher than it was trading earlier. So smart money uses this run above the short-term high to tap into immediate buying interest and resting liquidity. While price holds at that level, smart money steps in and sells aggressively to those buyers. Their stops get triggered, their short positions get liquidated, and on the flip side, breakout traders see the high break and rush to get long. They place buy stops that fire on the breakout. Smart money is harvesting both pools of orders. What are those orders? Buy-side liquidity. The counterparty to their shorts requires buying interest. The algorithm engineers that buying interest and runs price up here. Smart money then goes short at these levels, expecting to cover a portion back toward an old low, a fair value gap, or any premium, discount array visible on the daily chart. Later in this video I'll show you something important about staying disciplined with the model. Sticking strictly to the rules, if you choose not to trade during the lunch hour itself, that is perfectly fine. You simply wait until after lunch for a clear setup to develop. Those of you familiar with ICT concepts on YouTube already know this. This swing low here to a higher high than the previous one forms a breaker. Specifically, an ICT bearish breaker. What exactly is a breaker? It is a pattern where price runs out and takes a pool of liquidity, in this case, a buy-side liquidity pool. Then it reverses sharply and trades back below that short-term low. If price trades back up toward that level and the overall narrative remains bearish, you must already know what the market is targeting next. If you skip that step, it is not a breaker anymore. It becomes a gamble. It turns into aimless speculation. This down close candle, the lowest one just before the move up that cleared the short-term high, is key. but this gives you a complete picture of what to watch in price action. And as price starts climbing back into this level, I anticipate and expect that level to repel price forcefully. Then we go lower aggressively, trade below that level because sell-side liquidity sits there. And we do not want to see it drop below this low only to reverse higher. We want acceleration straight down. It needs to run quickly toward that level because a larger liquidity pool waits below. Then it aggressively targets that fair value gap, breaker, order block, or any PD array on the daily chart. That is exactly where the algorithm intends to take price. In the afternoon session, you can clearly see the post-breaker action. Heavy selling pressure develops below this level and then it accelerates. There is one detail most traders completely miss that we will come back to in a moment. See how rapidly it drops. Small consolidation. No meaningful retracement. No return to a broken old low where support might flip to resistance. Forget those retail ideas. This is a classic algorithmic sell day. Retail traders rarely get many of these. You either position yourself early or watch the move leave without you. And that is precisely what we observe here. Price trades through this level and drives straight back into a daily fair value gap. Let me quickly recap the essential rules so you never miss this setup again. Look at this chart one more time to lock it in. First, always determine the daily range bias before the afternoon. Is it expanding higher, lower, countertrend, or consolidating for news? Never trade without that clarity. Second, focus on the New York lunch hour 12 o'clock to 1 p.m. If bearish, expect the algorithm to sweep buy-side liquidity above short-term highs formed during or just before lunch. Third, that sweep is engineered to liquidate morning shorts and trap breakout long smart money sells into both pools. Fourth, after the sweep, watch for the bearish breaker to form. Price runs liquidity, reverses below the short-term low, then retests from below. Fifth, only enter if the narrative stays bearish and targets a clear PD array fair value gap, order block, or daily level. Without that target, it's not a breaker, it's speculation. Sixth, post-breaker, look for aggressive acceleration, lower no deep retracements, no old low retests flipping to support, small consolidations only. Seventh, if you skip lunch hour trading, wait for the clean post-lunch setup, patience pays here. Eighth, this is algorithmic retail concepts like support resistance flips rarely apply on these strong sell days. Get in early or watch it leave. Master these 8 rules, and the afternoon session becomes one of your highest probability windows. That's it, traders. Thank you for watching. I hope this explanation delivered greater clarity and practical insight that you can apply to your own trading. Make sure to subscribe and turn on notifications so you never miss future content. Leave your questions and suggestions in the comments section below. Let us know which topics you would like to see covered next. We truly appreciate your support, and we look forward to seeing you in the next episode.